Michael Burry recently put out a tweet that is definitely worth mentioning. It could mark the beginning of the end with regards to the dollar being the world's reserve currency, and it could begin to bring in usher in a new inflationary cycle in all currencies around the world, even the dollar, which is definitely going against the trend that's been in place for the last 70 years of the dollar being a safe haven asset for other central banks when there's times of trouble. Essentially, this has to do with the inflation, very high inflationary levels that the dollar is still experiencing, even though central banks are currently going to it as a safe haven. So, without further ado, I'll get into Michael Burry's tweet and then kind of break down different steps of what he's likely referring to in terms of the dollar beginning to lose trust, just people around the world beginning to lose trust, even in the Fed. How this will play into a long-term inflationary cycle, most likely. So, Michael Burry's tweet is, when you see mention of the strong dollar, the almighty dollar, please remember this is only in relation to other fiat currencies. The dollar is not at all strong, and it is not getting stronger. We all see it every single day in prices of everything. So essentially, Michael Burry is saying that even though the dollar index is at 20-year highs, it's still around a 20-year high resistance level. This is only in relation to other fiat currencies. So if you take a look at the dollar priced in oil, priced in gold, priced in commodities, the dollar has not been doing well at all. And this is a somewhat troubling trend if you are in the central bank, if you are wanting to keep the status quo system in place. Essentially, it's forced the Federal Reserve to continue putting out this narrative that they are going to fight inflation, that they're going to come in, Paul Volcker style with guns blazing, as Volcker was able to do back in the early 1980s with taming inflation by simply jacking up rates aggressively. The Fed has had to continue this narrative, and so far they've been somewhat successful in keeping consumers' trusts up out there that they will eventually get inflation under control. However, what a lot of people failed to realize is that debt to GDP was nowhere near what it is now at 120% in the United States. It's somewhere around 50% or less back in the early 1980s. So when Paul Volcker did this, when he raised rates aggressively, he likely wasn't, the concern was likely not forefront on his mind of bankrupting the US government. Essentially, with debt to GDP being as high as it is right now, the Federal Reserve cannot afford for rates to go that high. And so essentially the Fed is likely bluffing at this point. Basic mathematics would tell anybody that, because if they do continue to raise rates Paul Volcker style, if they take short end of the credit spread to where it would need to go in order to actually bring down inflation aggressively, first of all, the economy could not handle that. The economy would implode. It's already likely that we're entering into a recession. It will be technically a recession if we have second quarter GDP come in negative, because the first quarter was negative. But essentially the Fed is having to talk this very tough talk, and yet their actions are not backing that up, at least so far, because if they were to raise rates that aggressively, the economy would implode, and also it would likely bankrupt the entire US government, because they could no longer finance all of this deficit spending and all of the servicing of the existing debt out there. They could not do both of those at the same time. And what Michael Burry is pointing out is that effectively this trend is already beginning to show with other currencies out there crashing against the dollar, and yet the dollar itself is going down against commodities, against store value like gold. The dollar already is not performing well, even though central banks are going to it as a safe haven. And typically when central banks have gone to the dollar as a safe haven, we've actually have had brief periods of disinflation where inflation has gone down, maybe even deflation, where temporarily the dollar goes up in relation to other stores of value. However, right now, this is a really troubling trend where central banks are going to the dollar as a safe haven, because their currency, whether it's the Venezuelan real or the Turkish lira or whatever, even the Japanese yen, the euro, those currencies are having severe issues right now, and so central banks are going to dollars. Typically, this causes a large spike in the demand for dollars, and therefore the dollar goes up in strength relative to stores of value. But right now, what we're seeing is so far that is not happening. The dollar is not going up in terms of its supposed store of value role that it has played in the past. And this likely is, arguably, this is marking the beginning of the end of the era of the dollar being the world's reserve currency, and people really having the solid trust in the dollar that they did in the past. So all this being said, this is simply an interesting video to make in terms of pointing out a shifting trend that is likely currently underway. Obviously, if we begin to see this trend continue, begin to amplify, so if gold goes up substantially against the dollar, other stores of value, if oil continues to break out against the dollar, natural gas, that could begin to sort of confirm that we're entering this era of inflation throughout the world, even in the dollar, even as central banks are going to the dollar as a safe haven, the dollar would likely continue to do poorly. So that'll only confirm that this trend is going on. There could even still be a reversal in this trend where we do see a disinflation for a brief period of time. But all that being said, I just wanted to make this video going off of Michael Burry's tweet here. It's definitely something worth pointing out, that this could be marking the beginning of the end of the dollar being the world's reserve currency, and what to look for if this trend does continue. So all that being said, if you guys liked this video, just consider subscribing down below, hitting the thumbs up button if you liked the video. If you didn't like it, give it a thumbs down and let me know why down in the comment section below. And I hope to see you guys all again at some point.